Taking a look at the equity quadrants today, a down day for U.S. equities. The NASDAQ was not left out of that. The NASDAQ was lower for the third session in the last six now, despite the falling yields. Today on the lows, 15,523.75 for the September NASDAQ. That was down just short of 1%. On the upside, 1/10% higher, not much. 15,691 was the high. We ended up finishing the day down around 0.5%, a little bit better than that, but still a down day nonetheless. As I mentioned, the 10-year yields kind of backed up a little bit. So did the 20-year and the 30-year. Yields fell. The 10-year gave up all of yesterday's rise in yields. Prior day, the close was 133 on the yield, 1.33%. Yesterday, 1.38. Today, 1.33 again. We had similar moves in the 20-year yield and the 30-year yield, although they didn't go all the way back to the close of Friday. They retained about 1 or 2 basis points of yesterday's rise, but the 10-year went all the way back. And the NASDAQ tends to be a little bit sensitive to the rise in yields. Didn't seem to help at all today with that down day. Now, index downgrades were part of what the pressure was, because there were some pretty big firms that pushed back on where stocks are. Strategists at Goldman Sachs, for example, warned that, quote, high valuations have increased market fragility. At Morgan Stanley, they cited outsized risks to growth through October as their reasoning for moving to underweight U.S. equities. And then strategists at Citigroup warned that a small correction could be amplified by forced long liquidation due to a very high 10-to-1 long to short ratio in the equity markets overall. So that helped the sector breakdown move into defensive stocks, consumer discretionary, utilities, the only real strong performers in the sector breakdown. And that all put pressure on the NASDAQ to finish off of record highs with a down day today. A little bit better than down 0.5%.